to all the Web3 enthusiasts out there. This is Max speaking, and welcome to the new exciting episode of Synopsis. Really exciting because even during the preparations, all our team was uh, once again excited, and everyone was asking me to include some of the questions you'll hear during today. So please welcome our today's guest, Matt Hougan, CIO of Bitwise. Hello, Matt. How are you today?
Oh, Max, so excited to be here on Synopsis. Can't wait for this conversation. I'm excited too.
Awesome. So let's just get straight to the action because I have a bunch of questions prepared.
Let's do it.
So to begin with, to warm up, although I know in both locations where right now it's hot, but still, let's make some intro. And could you please tell us the story of how you first came across and then started working in the Web3 industry?
Yeah, absolutely. So my origin story starts in exchange traded funds or ETFs, which are the dominant way many people invest. Obviously, there are a number of big Bitcoin and Ethereum ETFs now, and ETFs on other assets. I was early into ETFs. I ran a company called ETF.com. And at the time, no one really liked ETFs. They were this disruptive new technology that traditional financial firms were skeptical of. But we saw ETFs as this huge, new, more efficient way to conduct investing. And we thought they would be very big. So we built this company and it grew over time. I raised that because the first intersection with Web3 was while I was at ETF.com, where I was CEO. We had a team of young analysts. They were interested in all new ideas. And the day that Bitcoin crossed a dollar, which was in February 2011, we had an hour-long meeting about what Bitcoin was, what blockchain was, and what it could mean for the world. Unfortunately, I didn't go out and buy a lot of Bitcoin, but fortunately, I started following it. And so after I sold ETF.com, which was in 2015, I looked around for something else that fit the mold of ETFs, which is a disruptive technology that I thought could make the world a better place, but where the media and the mainstream institutions were skeptical of it. And that was crypto. Crypto's come a long way since then, but I knew that the next phase of my journey was going to be in the Web3 space. I think we're just at the point of discovering what blockchains and Web3 tools can do for the world. But it's been really exciting, just like I saw ETFs go from an alternative to a mainstream investing tool. I'm now watching crypto and Web3 go from an alternative idea increasingly into the mainstream, and it's just wonderful to see.
Wow, awesome. Thanks for sharing. Always pretty interesting to know the path of our guest in Web3. And we're moving to the main part, I would say, of today's discussion. And before we begin it, a short disclaimer, because of course, unsurprisingly, today we're going to speak a lot about Bitcoin, about some price expectations, opinions on where the market goes. And for our viewers, of course, nothing of what's going to be said is a financial advice unless Matt says different. And we're just providing some extra ideas, some views, opinions on how the things are going on. Correct me if I'm wrong.
No, that's absolutely right. Everyone should do their own research. We're just providing some thoughts.
Sure. So started with this reminder, and as I said, the entire team was excited to see you, Matt, at our podcast. And the first question will be, uh, like from our editor in chief, he shared an article where you expressed an opinion about the cycles of the market. So let me just ask it directly. So we saw your opinion about 4-year cycles being replaced by a sustained steady boom up and to the right. However, nothing can grow constantly. And when do you think corrections will be happening in the new Web3 market paradigm?
Yeah, that's a great question. So just to frame it for people who don't know, historically, Bitcoin and therefore crypto has moved in these really familiar 4-year cycles. For instance, 2011, 2012, and 2013 were big up years. 2014, we pulled back 60 or 70%. And then 2015, 2016, 2017, big up years. 2018, we fell back about 60%. So the worry is that we're approaching that pullback year, right? 23, 24, 25, all big up years for Bitcoin. Could 2026 be a significant pullback? What I was saying in my article is I don't think so. I think the reasons we had pullbacks in the past have become less powerful. Many people associated the pullbacks with the Bitcoin halving, but of course, after every halving, it becomes half as important as it was in the past. Other people talk about interest rates, but interest rates in the US are likely to go down over the next couple of months, not up. So I see those forces as weaker. And at the same time, we have institutions plowing, in my view, what will end up being trillions of dollars of money into Web3 investments. And that moves over a 5 to 10 year cycle. It doesn't happen in 1 year or 2 years. So, for all those reasons, I think 2026 will actually be a strong year. But it's a great question from your editor in chief. What does that mean for volatility? Will we still have volatility? And the answer there is absolutely. We're still going to have volatility. Now, I don't think we'll have 70% pullbacks like we had in the past. I think those days are over. I think we may have 30%, 40% pullbacks. They'll probably happen at the same time that we have stock market sharp corrections if the world enters a risk off market. I think that's entirely possible, but I think we'll have less volatility than we had in the past. And I think we're in for a number of good years in this market. There's just too much investment coming into the space, I think, to hold prices down for very long.
Absolutely. So sounds extremely reasonable, and thanks for um, clarifying those thing about the cycles, because sometimes I forget that our audience is growing pretty fast, and there might be so many newbies, especially not especially, but just as well as in the entire industry, since we're growing on all the fronts. Well, thank you. And what about actually this year? We're getting closer to Q4 actually. And do you personally agree with Bitwise Bitcoin price forecast for this year? It's $200,000. Why do you think it will happen or not?
Yeah, I do think it will happen. And I know that's a lot to say because we're currently at $114,000 or so. But I'd note a few things. One, Bitcoin's price is set by supply and demand. And right now, there is just so much new demand from ETFs purchasing Bitcoin. We see it at Bitwise, from companies purchasing Bitcoin. We think that's going to accelerate in the fall, particularly ETF purchases. Many ETF purchases are by financial advisors or family offices or institutions. They're on holiday right now. They don't tend to buy a lot in the summer. That tends to heat up in September and October and November into the end of the year. We have also seen major wealth platforms in the US, firms like Morgan Stanley that controls, I think, $3 trillion of assets, just now opening up to Bitcoin ETFs. So we think there is huge demand coming into the market, particularly as we enter the fall, that's going to push prices up substantially. It's worth noting, historically, August and September are the two worst months of the year for Bitcoin. I'm not surprised that the market has lost a little momentum or stalled out right now. We still think we're going to get to that $200,000 level. We think the end of Q3 and Q4 are going to be a very exciting time for crypto.
That's sounds bullish, first of all, and yeah, once again, sounds extremely reasonable. So, although the paradigm of the market cycles might be changing, some historical data and things like uh, low demand on August and September are still in the game, and we should deal with it, of course. Thank you, and let's move on with more questions about Bitwise. So the next one will be that Bitwise offers diverse products that cover cryptocurrencies and Web3 related companies. What is the corporate product strategy going forward?
Yeah, you can think of us offering, well, from a big picture, we want to offer all the solutions to how to allocate to the growing crypto and Web3 market. So we want people to come to us and learn to trust us through one product, let's say our spot Bitcoin ETF. But then as they become more expert on crypto and Web3, we think they'll want broader exposure. Maybe they want exposure to Ethereum. Maybe they want exposure to DeFi assets. Maybe they want exposure to companies that are building in the space. Maybe they want to do things on chain, like stake their Ethereum. So Bitwise's product offering can be summed up as how do we serve all the needs of crypto investors in a professional format? That can mean spot crypto ETPs that just buy Bitcoin or just buy Ethereum. It can mean an index fund that invests across a wide array of crypto assets. It can mean companies that are building, whether it's Bitcoin miners or mining equipment manufacturers or asset managers or Web3 companies that use crypto rails to do interesting things. We offer products across that full suite. We want to be the iconic crypto asset manager that helps professional investors gain exposure to everything that's happening in crypto. And so that's going to mean a lot of things over time. Today, I think it's north of 30 products, and I expect that will expand as Web3 and crypto continues to grow.
Sounds great. And if you don't mind, what about your personal investments? So, do you actually invest in crypto? And if yes, do you copy Bitwise portfolio or adopt a unique strategy?
Yeah, absolutely. Yeah, you wouldn't work in this space if you didn't want to have exposure. I actually buy Bitwise's own funds. So my largest single holding is our index fund. And then I have investment across a number of different crypto assets and crypto companies, as well as, of course, working at Bitwise itself. But 100%, I think crypto is one of the most attractive areas of the market from a risk reward perspective. And so I'd be foolish if I didn't put my money where my mouth is. And I do by buying Bitwise's own products.
Great to hear, and that's the best, I would say, metrics of believing in what you are doing. And that's wonderful. And the next question, to your mind, where is the Web3 industry going in the context of global finance in the next, I would say, 5 years?
Yeah, it's a great question. I'm going to start from a US perspective because I'm based here in the US. And of course, we're one of the largest financial markets in the world. But
Sure.
I would encourage people to read a speech by our SEC chairman, Paul Atkins, which just came out last week. It's called Project Crypto. And the SEC is the most important financial regulator in the US, directing the largest financial market. Project Crypto lays out a vision for all financial assets to move over blockchain-based rails and to move on DeFi protocols, to move in single apps, but not just crypto assets, stocks, bonds, money market funds, all financial assets. I think it's the most remarkable speech I've ever read by a regulator. It lays out a vision that would make someone who is pro crypto, pro Web3 almost blush. It's almost more bullish than I am about the impact that this has. And if the leading regulator in the US wants to move financial markets onto blockchain-based rails, there's a good chance that that is going to happen. So look, blockchain and Web3 is just a fundamentally better technological infrastructure for the movement of assets with value. It's like the internet for value. It's all the things we've been talking about for the past 10 years. But now regulators and legislatures are lining up to help make that happen. I would, again, encourage everyone to go read that speech. It's hard to read it and not be extraordinarily optimistic about where this industry is going.
Well, it's a great call to action. It also aligns with what has been said in the beginning about doing your own research. So yes, guys, it's always very convenient to read some summary or to know some from some bloggers, but just go ahead and read such fundamental things at least. Actually, I was surprised to know that the majority of people I know who work in the Web3 have never even tried to read the white paper of Bitcoin. So uh, I do hope that our audience will follow the advice. Or what
It's
are we doing here?
it's so true. It's so true. And that's a great, you should read the Bitcoin white paper too. It's only a handful of pages. You can
Yeah,
understand it. One of the beauties of this space is you have access to the root level. You have transparency, and you should take advantage of that, whether that's the white paper or speeches by the leading regulators in the world. It's all there for you to do your own research.
yeah, so true. And we're moving on with a very, I would say, scary question for many skeptics who are just trying to know more about the risk and get on board or not. So, how do you think, how high are the risks of a black swan event that destroys the Web3 industry in its entirety?
Yeah, wow. So I think they've diminished. I should say that. I will say that the biggest black swan event, maybe it was a white swan because I guess I could see it coming, but the biggest risk that I could see coming was one where global regulators collaborated to squash Web3 and blockchain. Um, they can't shut off Bitcoin, they can't shut off Ethereum, but they can make it very difficult for those to penetrate other markets. And for many years, they did. The US was overtly hostile to Web3 and crypto. Many other countries were overtly hostile. You know, China took a very adversarial view against Bitcoin for a number of years. You saw miners move out of that market, and the US did the same. That risk seems to have almost gone away. The US has made a full pivot in favor of crypto. You see other countries aligning with that view. So I think the regulatory risk, which was the biggest, most dangerous black swan, has mostly disappeared. You can't dismiss other risks. You can't dismiss the risk associated with quantum computing. Maybe it wouldn't destroy the Web3 industry, but a shock advance there would really create some ripples and technical difficulties. You can't remove the risk of what I call headline risk, someone doing something bad with crypto. People do bad things with traditional financial assets all the time. But if someone did something really bad with crypto, it would attract media headlines and that would be negative. So it's not zero, but you don't get the kind of returns you get in crypto historically without taking on risk. This risk, you just have to accept it's part of the process. It's again, it's not zero, but it's not as substantial as it was even a year ago.
Yeah, so thanks for sharing, and I think I can feel the relieved breath of many viewers after this answer. And of course, I would say there are no spheres with a zero risk, not even in the finance, but in many, in most of the our life spheres. And of course, since our industry is still emerging, is still very small, and that's why the big things can cause uh, such big attention from the media, and it's like a snowball. But we're growing, and seems like we really passed through some stages of the most dangerous parts. Awesome. And for more forecasts and expectations, not about the risk, but about some maybe hidden gems. So, Matt, do you think any other blockchain project could overtake Bitcoin in 10 years? And which one could it be, just in theory?
Hmm, great question. So, I think the probable answer is no, but I think many blockchains will be really successful. I think of blockchains enabling sort of two core things. One is the ability to store digital wealth, and the other is the ability to move digital wealth. And Bitcoin has a really dramatic lead in storing digital wealth. And that is a huge market, right? Gold is a 20 trillion US market. Offshore wealth is another 20, 30 trillion dollar market. These are big markets that Bitcoin could disrupt. It could 10x from here and not have fully penetrated that market. So Bitcoin has a long room to road. But Ethereum and other assets enable us to move financial assets over blockchains at the speed of light. And that is also a very big market. I think that could disrupt substantial portions of the financial industry, and it could grow the addressable market of finance, two, three, four, five-fold because it can do more creative things. So I suspect in 10 years, Bitcoin will be money in a digital format, and other assets will move over blockchains like Ethereum, Solana, Cardano, XRP, Avalanche, Sui, Aptos. One thing you'll note in my answer, Max, is there's much more competition in the second one, right? I said Bitcoin is dominant in money. I think that's probably true. In this other space, there's less certainty about whether it'll be only Ethereum or something will surpass Ethereum or it'll be shared amongst multiple different blockchains. And I think that's probably just the reality. That space is newer, it's more competitive, it's more evolving. For investors, what does that mean? Well, you have to decide for yourself. For me, in my personal portfolio, I want to own both and just see how it turns out. However, it turns out is fine with me.
Great. Thanks for sharing. And yeah, we'll for sure be breaking this race for the second or the third place. And anyways, seems like the things will go organically and the industry will evolve as it should. Okay. And since you mentioned once again your own investments, I would like to ask one more question about the Bitwise and combine it with the risk question. So could you please tell us what are Bitwise funds with the highest and lowest risk, and which one is more popular with investors?
Oh, great question. I think if you look at the data, what you'd find is we have a couple of products that follow a momentum-based strategy that rotate into or out of cryptocurrencies depending on momentum trends. So they might own Bitcoin if the market has been trending up historically, and then might just own US Treasuries if the market has been trending down. They follow a strategy called the trendwise strategies. And I think if you look at historical risk, those have been the least risky because they tend to rotate out of the market when it becomes significantly volatile. That's how they're designed. On the other end of the spectrum, um, we have an ETF. I don't actually know which is statistically the most risky, but amongst the most risky, we have an ETF called Owned B, OWNB, that holds Bitcoin treasury companies like Strategy. Um, and that's a very volatile part of the market. And I would imagine that that is one of the riskier funds we have from a statistical perspective. Again, we try to offer a wide variety of funds, and everyone, of course, should do their own research. I'm speaking in generalities here and not in specifics.
Got it. Thanks for sharing the very interesting
Yeah.
statistics. And we're getting closer to the final part of today's interview. And we could not, of course, but it include at least one question about regulations. So could you share your opinion on what country has the most favorable cryptocurrency regulations right now and why?
Yeah, it's sort of a race to the top right now. I think the easy answer 2 years ago would have been to look to the Middle East and look to places like Dubai and the United Arab Emirates, which were aggressively embracing progressive crypto regulation and did a great job with that framework. You also saw very progressive regulations in places like Singapore and many other jurisdictions, and the U.S. was the laggard. I think the US may be challenging for that. I'm not sure if we have the most progressive crypto regulations, but I think we've had the biggest swing from anti-crypto to pro-crypto, and we're catching up with some of those leaders in the Middle East in particular, who have really been forward-thinking in this space. So everything is moving in a positive direction. The US is playing catch up, but we're getting there. We're in a pretty good place right now.
Oh, Bill sounds really encouraging, and thanks for the uh, positive vibes. And it's a great timing for it because we're here at the final traditional part of all our podcasts. Could you please go ahead and share some piece of advice with our audience? Maybe something general, maybe something about investments, just whatever you find valuable to hear right now for them. Please go ahead.
Yeah, let me give two pieces of advice. The first is one we talked about earlier, which is these documents are there for you to read. I really do mean it. Go read this speech from Paul Atkins. It was on July 31st. It's a remarkable view from the world's largest financial regulator about what financial markets are going to look like in the next 5 years. And it sort of gives you a roadmap for some of the more interesting areas to consider for investing. So you can do that. It takes about 10 minutes to read. I think those 10 minutes will be extremely well invested. The other thing I would say is, there's a temptation in crypto to try to trade because assets trade 24/7 and they're very volatile and it's very exciting. And I think it's completely fair to speculate on short-term movements with a portion of your crypto portfolio. But if I had one thing that I've learned over 8 years almost of working in this industry is my ability to forecast what's going to happen in the next week is really rough. I actually don't know. I work in this industry full time. I have a team of research analysts. I don't know what's going to happen in the next week. But if you ask me what's going to happen over the next 5 years, I just have huge confidence that crypto will be more important in 5 years than it is today. And what that means, again, is not that you have to just buy Bitcoin and forget about it and never trade anything. But with a portion of your portfolio, I think it's reasonable to take a very long-term view because, again, the confidence I have on where we'll be 5 years from now is much higher than the confidence of where we'll be in 5 days. Up, down, sideways. Your guess is as good as mine. But over that long time period, I'm really confident on where this Web3 industry is going.
Awesome. Thank you so much, Matt, for a perfect ending and addressing to our audience. You guys heard everything. The CIO of Bitwise has just give you two great advices on how to invest your time, which is also one of the main resources we have. So just you heard everything, nothing to add from my end. So guys, do your own research, stay educated, and let's build a bright future. So, thank you very much, Matt, for joining in today. It was a pleasure to meet you, and I do hope to see you in more episodes. And for those,
Absolutely. Let's do it again. This was really fun. Thanks for having me.
thank you so much, and thanks for our audience for watching till the end. So, see you in more episodes. Bye bye, everyone.